Hi, I'm Mark King, investment editor at Columbia Threadneedle Investments, and here's what's in my weekly column. Well, it's time for another European market roundup, and in June, Europe's leading stock markets lost ground as investors' attention turned to global growth prospects and monetary policy. The Pan-European Stoxx 600 index, and that's the region's largest 600 companies, lost more than 2.7% over the course of the month, ending at 379 points. This was its lowest level since April this year, but is still almost 6% up on its 2017 starting point. The stock suffered after European Central Bank President Mario Draghi told reporters he was confident that the ECB's recent stimulus measures, which have involved pumping billions of euros into the region's banking system through a programme of quantitative easing, or QE, would succeed in generating a healthy level of demand in the Eurozone and restoring inflationary pressures. Draghi's remarks, which coincided with similar comments in the UK and elsewhere, were interpreted to mean that the QE scheme would be wound down sooner rather than later, and that the ECB might need to raise interest rates sooner than thought. Clearly, stock markets reacted to this. For stock markets, these factors have a number of potential consequences. In general, QE, which involves central banks buying bonds from commercial banks and other institutional investors, has had a positive impact on share prices. So any reduction in current QE levels is likely to be seen by investors as a negative. June also saw sustained falls in the oil price over the first 3 weeks of the month, resulting in declines in energy company values, which caused some stocks to wobble. There's more in this week's column. But finally, a quick pat on the back for Columbia Threadneedle Investments, as we've been named Employer of the Year at the 2017 Women in Finance Awards. The awards are the European finance industry's largest diversity event, and they celebrate the achievements of those firms and individuals in the world of finance that are actively bridging the diversity gap in the sector. The judges look for companies with the most diversity among senior employees, the best maternity and paternity benefits, a proven track record in promoting diversity, and the most extensive diversity supportive policies in recruitment and operations. The judges said that Columbia Threadneedle had introduced specific measures promoting diversity, which is backed up by a measurable impact. See you next week.